Hi guys, this is Rosalind Lewis coming to you from Charlotte, North Carolina. And as always, I want to invite you to subscribe if you are getting value out of my channel. Also, please don't forget to click the like and share buttons and the notification bell so that each week when I premiere a new video, you will be notified. So today's topic is for those of you that want to know what to expect when buying a home for the first time ever. I am going to share with you everything you need to know about how to buy your first house. Now, I am in Charlotte. So if you are not in Charlotte, that's okay, as long as you're still in the United States. These tips are going to apply to 80 to 95% of the people that are watching this video. If you're outside of the country, this video probably isn't for you. I decided to make it into a 3-part series so that you can take bite-sized pieces and not get information overload, instead of giving it all to you in one big gulp. So stay tuned, you don't want to miss it. Tip number 1, are you ready financially? So you need to have a credit score of 640 or above. There are lenders who can go lower, maybe 620. Some lenders will even go down to 580, but you're going to pay more for that loan because the interest rate will be much higher. So if possible, try to get your credit score up above 640. If you don't know how exactly to do that, you can have a talk with a loan officer, or you can go somewhere like myfico.com, which will give you lots of useful tips on how to raise your credit score. If you don't know what your credit score is, go somewhere like Credit Karma or one of those free services that will tell you what your credit score is at no charge without having to sign up for anything. Now, let's talk about how much money you really need to buy the house. Most people should expect to spend 3.5% of the sales price of the house as their down payment. This is what an FHA loan requires. Now, there are many military buyers, whether you are active duty or retired, or maybe you just did a couple of years and got out. You're not considered retired, but you would still qualify for a VA loan. VA loans will require zero money down for the down payment. There are also things like a USDA loan, which is where you live in a more rural area, and you can qualify for zero down if you are considered a low to moderate income home borrower. There are also lots of government grants and programs that give you down payment assistance. So it is possible to buy a house with no down payment, but plan to have 3.5% down in case you don't qualify for any of those programs. There are also closing costs you will want to consider. Basically, the fees involved with the privilege of borrowing the bank's money for the next 30 years. So, they are fees that your bank is going to charge you for getting a loan from them. There will be title insurance, where they will make sure that the person selling you the house has the legal right to do so. And after you buy it, nobody can come back and say, I'm actually the rightful owner of that property. There are the fees that your title or escrow company or closing attorney will charge for handling the entire transaction as kind of a third-party neutral person. All of those are considered closing costs. Closing costs typically run 3 to 4% of the sales price of the house. So let's say we're talking about a $250,000 house. If you had 3.5% to your down payment, that would be $8,750. And then roughly that same amount for closing costs. Now you can ask the seller to pay for your closing costs. You can ask for the entire amount. You can ask for half of it. If your closing costs were going to be $8,750, you can say, would you give me $3,000 towards my closing costs? That would be something you and your realtor will decide together. You can always ask, but the seller can always say no. So keep that in mind. But if you make your offer very financially attractive to them in other ways, then perhaps they would be happy to do that for you. That's less money out of pocket for you. Have you been gainfully employed for the last year? You will have to prove that you've got employment or a way to actually pay for the mortgage that the lender is providing. And that can also come from things like alimony, child support, but you're going to have to document your income and show what you can afford so that they can tell you what sort of monthly payment you'd be able to afford. And finally, do you have any money saved up? You can buy a house with no money down, but if something needs to be repaired with the house, like a window being replaced or something like that, in which your homeowner's insurance will not cover it, then that cost will come out of your pocket. And if you've got no money in the bank, it's going to be really stressful for you. So you don't have to have $20,000 in the bank, but you do need to have some sort of a nest egg saved up. You will have other costs after you buy the home, like having your lawn mowed. If you have a siding home, you will have to be able to pressure wash your home at least once a year. You will be the one that will be responsible for these things being taken care of. There will no longer be a landlord you can call to fix what's broken as you did when you were renting. Don't we all miss that? There will be things that break and are unexpected surprises, and you need to have money saved for these surprises so that you're able to take care of them. So tip number 2, find a great realtor. Now, a lot of first-time buyers don't know that it doesn't cost anything to work with a real estate agent to help you find a house. When a seller decides they're going to sell their house, they tell their agent, I will pay you this much to sell it, and I will pay this much to the agent that represents the buyer. So the seller pays our fee, the buyer does not pay. You get professional representation from a professional real estate agent, but someone else foots the bill. Now, having said that, just because you're not the one paying for it doesn't mean that you don't have the right to interview people. You need to interview agents to find out if you will be able to work with them. You need to feel comfortable sharing personal financial information. Also, you need to feel like that person listens to your needs and has your best interests at heart. So if you're going to interview an agent, here's some good things that you can ask. How many buyers do you typically represent in a year? There are plenty of real estate agents who primarily work with sellers. If they haven't had the option of working with a buyer in the past 6 months, maybe they are not for you. How many buyers do you represent at one time? Do you work alone or do you have a team? There are some agents that work part-time because they work a full-time job. If you are told that they are part-time, how much time are they going to have available to show you homes when they work with you? Do you have any recent reviews or testimonials? These are important. You want to know what other people have said about this agent. Was it like, what was it like working with that agent? Go read these testimonials. If these clients will agree to be contacted, there is no reason why you can't send them an email or call them and say, how was it working with this person? Tip number 3, get pre-approved. If you have a bank that you use locally and you love them, by all means, go in and talk to them, find out what they can offer of a mortgage. Or once you're hired an agent, ask that agent, who do you work with regularly that has a great loan program for first-time buyers? We work with these lenders every single day, and we will gladly give you their information. We do not receive any sort of compensation or kickback for recommending a lender to you. We simply refer our clients to people that we know, like, trust, have worked with in the past. And we know that they're going to do a good job for you. One of the main reasons to get pre-approved is that when you present an offer to the seller does not want to take their home off the market and risk losing out on other offers. If you're not even pre-approved yet, we don't know if you can how much a house you can afford for a loan. Also, if you start viewing properties and fall in love with that property and then go through getting approval and find out you don't qualify for that property, then you will be disappointed. We need to know up front exactly what your budget is so that we are only looking at houses you can afford. So that is the end of the first video. I hope that this was not too much information to sit down and digest at one time. Look for video number 2 coming up shortly, where I will be talking about the next few steps in the process. Thank you so much for watching, and stay tuned. Another one of my videos is coming up.